Great.
All right, so I'm going to do that, and I'm going to share my screen so you can see. So we can kind of walk through it together. So can you see the chart right now? Like, can you see my trading view screen?
Brown. Cool. Yep.
Okay. So you mentioned you bought a stock at this ABRO or APRO, and it got bought out.
So it's going to be, yep, APRO.
Okay.
So it was 15, it was like a 15 to split, and so now it's gone. So for this, as you zoomed out, what I did was I saw it gapped up immensely before I bought it.
Okay.
And so what I did was I followed the trend, and then when it hit that split, it just fucking tanked. It was just stupid. It was the dumbest thing that I could have gotten into.
But now if it got bought out, you lost money on a split?
Yeah, so what I did was when it got split, when it went down, the next day it just gapped down. I think it gapped down what? I think it was $3 or $4, and I was like, well, shit, there's no real support under this, and then it just kept tanking even lower.
So the splits. That's why we even have one of the lessons in chart reading where it's like when the stock splits, it's like run for the hills, and we typically see like bigger companies. If you think of like Apple or Tesla, they do it like strategically. Or they just wait until the stock gets like super extended, and then they'll split it at that point to then make this stock appear cheaper. Like you can see, Tesla and Apple almost did it within like days of each other. You can see up here, this is when they split it, and you can see at that time, Apple had gone up significantly. They split the stock, and then it proceeded to drop 30%. Same thing with Tesla. Literally, like I said, it was almost within days of each other. They both did the same thing. Tesla split the stock here, and it proceeded to just drop 30% very quickly. And again, it's not a way to run. Now, these are extremely popular names, and they just do it when the stock is very extended. Whereas with this APRO, that's not as popular of a name. Just in general, when we hear the stock split, it's usually the end of a move. And you had mentioned before, like the stock had gapped up significantly, then they split it, and then the stock got smoked. And that's usually the reason why, is because the only people that are coming in to buy a stock split, and it's not you're already in it, then it's split. It's the only people that are coming in on that news is typically like dumb money investors, because they think that now that the stock is cheaper, it's a better deal, but they're the only ones. It's like the Robinhood equivalent. People are buying it now when they're not as strong as, say, a mutual fund like Vanguard, who can buy 100,000 shares and not even matter, where the guy on Robinhood is buying one share. So that's typically why when we hear a stock being split, we just want to get out, because we typically know that it's going to pull in for some time before it's going to trade anything higher than that price that it splits at. But then you mentioned it got bought out after the split.
So what it did was, after the split, it went into, they had a merger, and when the merger occurred, then it went under a whole new name, and it escapes me because I just totally, as soon as I saw that the news was coming out, or whenever it happened, and the ticker changed, I was like, well, I'm stuck. I either bleed out or wait it out. And I was like, I just got to get out of this thing now. There was no hope that thing was going to come through.
Yeah. What's the new ticker?
I have, hold on. I might be able to find it. Like in the $20 to $30 range, Ben. I'm not entirely sure what it is. I don't even know what it went to.
All right. But so I think the main thing thus far, it sounds like initially the stock gapped up, you got in, maybe there wasn't that much of a concrete game plan of what the idea was. You just saw it gapped up significantly and you got in. And then there was this subsequent bad news of the split as it fell, which is something that we see. And then the merger, and that's, again, it can get complicated. There was even a member who, I think Merck had like a spinoff earlier this year, and a member got like 20 shares of the spinoff. I'm like, I don't know what to do with it. And it's like those like one-off situations where, you don't know what to do, but this is, at least now going forward, one, if the stock gaps up significantly, usually it takes, wait for a setup if you're going to get in. And then secondly, if the stock announces it's going to split, and usually they announce, like, even for Apple and Tesla, like it's not like the next day they announce it and split. It's like we're splitting the stock, Friday, October 3rd. So once you start to hear those things, it's like, even for Apple and Tesla, it's like you held it until the day before the split and then you got out. So these are like, I don't know how much you lost in that particular trade, but now going forward, if I own a stock and I hear that it's splitting, let me get out as soon as possible, or wait until the day before and get out. And then you can avoid whatever the loss was for this particular trade.
Yeah. So let's put it this way, Ben. So just transparently, it was like $1,000 loss.
Okay.
So in that case, I'm kind of looking at it like as okay, well, you really messed up. So now what are you going to do to fix it? So what I ended up doing is I started finding some expensive names. Like I can think off the top of my head, like Spotify. Spotify had or not Spotify. Shopify. Yeah. So Shopify ended up buying like the 1400 level and rode it through highs. And once I started to see that it started to lose gas, took the foot off, and it was a solid trade, right? So maybe 250 bucks up off the top. Yeah. Yep. You're right in that range. So I rode it to the top and I was like, okay, so we're starting to lose gas. Let's get out. So then next one was mRNA, when it was hovering around like it was after earnings. And so saw the earnings, watched the stock for a little bit, watched it break through highs, rode it to the top. And that was like a 1-day transaction, right? So rode it to like the 500 level, got out at like the I'd say 475. I gave it a little bit of a cushion because I didn't have a lot of shares, but again, 150 bagger, probably somewhere in there. Nothing again. So you're looking at, okay, so I got my 3 something back. And then most recently, IronNet is the one trade that this is the one that I really wanted to talk to you about, because I don't get why I decided that I should just let this thing ride. But what I did was, after earnings, earnings made the gap up, and I'm like, okay, so if it breaks that, what is that? The third, it's like right around $30 level. If it breaks that candle where it got sold off incredibly, let's go ahead and let's ride it out. Let's see what happens. Next day, it gaps up crazy, right? I mean, it was a nice move, and I kind of let it set during the day because I was like, okay, break even, stop. Let's see what goes on here during the day. Next day, it goes to the top of the second day, and I got broke. It was break even. So I think that it all boils down to what you said earlier, was my game plan was a solid entry, but then I had no game plan to take profit. Absolutely none.
Yeah. So a couple of things. So even with this one, like this next day, you're talking about from the day before earnings till the day after earnings, you're talking about 100% move in 3 days. So these are things that, there's a couple of things. And are you still in this? It sounds like you're kind of still in it, or you gave it back to me.
Nope, I'm out of it.
Okay, cool. So first thing is, again, we got to be aware of just the percentage move that this name has had. So again, in 3 days, 100% move. Just that the next day, when it pretty much was up 50% by the high day, you have to kind of step back and be like, this is a pretty crazy percentage move in 3 days. It took the overall market 18 months to increase by 100%. This name has increased by 100% in 18 hours. So we have to take those things into consideration where, all right, you bought it at 30, it's at 48, it's up almost 50% since yesterday. That's like the win in itself. Even if it went to say 100 the next day, it's like you can't really account for those things. You have to just take that profit when you're there. It's, so those are just, again, it's always easier in hindsight, but those kind of crazy percentage moves, you got to take at least some of it off. The other bigger thing is you can't, and again, you want to make back the first loss, like that bigger loss. But then what's happening, what it looks like, is you're just gravitating towards like the craziest names. So it's like, all right, it's near earnings, names up 50% already. Let me make back the prior loss. Okay, mRNA, was already up again 100% in less than a month. Went from basically 220 to almost 400 in a straight line. Again, waited for after earnings, which is cool, but again, still waited. It had gone too much already. And I'm glad you made money in it, but it's like one risky trade, like one bad risky trade to then make it back, and only trying to find more risky trades to make it back. Yes, you may make it back sooner, but if mRNA didn't work, or this IRBT, or whatever the recent ones didn't work, you'd be digging the hole even faster. So it'd be, if one of these didn't work, it'd be okay, $1,000 loss. Okay, this blows. All right, mRNA didn't work. All right, that's a 10% loss. All right, that sucks. This next one, another 30% loss or 40%. So it's like you very quickly get into that, just almost like a downward spiral. And those are things we obviously don't want to happen.
Right.
And I think the overall theme here is just like kind of a lack of planning, other than the entry. It seems like, even for the stock that got bought out or merged, like you should know, especially if it was your worst trade, you should know the details. Okay, I bought this ARPO through 15, had a stock split. The next day it was at 14. It sold off to 10. It merged with MRBO. This is the new ticker. This is where, like, those are things that the more you can hammer in that lesson, especially the costly one, then them. Like for me, most recently it was Rocket. This was my worst trade in the last 18 months. And I know, and I've gone over this trade with, a lot of these trade recaps, I've gone over, in extreme detail, where it's like, okay, I bought up through the base, I added higher, took a break-even stop, I had to add through the proper level, I took my eye off it this first red day, really should have had a stop under the low a day or under 42, wasn't watching it, had a crazy, basically 10% drop the next day, I had to let it shake this area out, I added very lightly here, and then once it aged over, I took the 20% loss. And as annoyed as I was, it continued to drop 40%, and it's still nowhere near kind of where my cost basis was. So like this is like my worst trade, and I've went over it, 10 or 20 times since I've gone out with other members, and it's like I know this lesson like the back of my hand that if I'm buying up through this major base and I'm expecting this strong breakout, and the next day it's bearish engulfing, I gotta just get out because I'm not right in the trade. And this would have easily been, a 2% loss instead of it being a 20% loss, and it could have been a 40% loss. So with that first mistake, it's like we want to really hammer in what the mistake was and writing it out, and that's why we focus a lot on the trading journal, which I would recommend you to start doing.
Yep.
So let me just see really quickly. I think we have a folder for you already. Let me just see if I can find it really quick. And again, everyone that I've done this with, okay, here we go. Okay, so I don't know what that is, but I'm going to email this to you after. But what I would recommend you to do, I don't know why I can't find you on group. Okay. So what I would like for you to do Okay, so I just emailed you the link. So I would like for you to, at the end of this month, so you have a couple of days, is I see you've already been doing this step. You did it at some point, this step one part, but we'll update this. So just go back to September and just fill in what the relevant information is for today, what the account values are, fill all that out. And then more importantly for this step two is go down to this first month, September, track your overall performance. If you use TraderSync, you can screenshot the performance. And then in here, we want to put this again for the chart that's not there anymore that got put out. You're not going to do it for that one. But for these other trades, even though we've gone over them, I would still recommend, going on TradingView, screenshotting the chart. I bought up through here. I sold, wherever you sold, I sold here, whatever it was. Summarize your, okay, I bought up to 1400. If this was the entry, same thing. It was definitely wildly extended. It was up 200 points. It was fifth day up. I really shouldn't have been in this trade to begin with. It happened to work. I made some money. Next time, I'm not going to chase names that are 5 days up. Or mRNA, I had it was up 100%. I waited till after earnings. I bought up to 420, versus 390. I kicked, went into 500. I got stopped out. That was the trade. But the more you can sit there and spend the an hour a month to summarize these trades, you will see the mistakes before before I'm going to see them, and it's much easier where we know for next month. All right, next month if we ever in a stock that is announced a split, we're going to get out. If the name is up 5 days in a row, even if it's going to go higher, we're not going to look to get in because 9 times out of 10 we're going to be too late in the trade anyways.
Right.
And also just trying to maybe avoid some of these crazier names because the stock split name, I've never heard of that ticker, so it was probably just some crazier name. And then the other recent I put that did work 150%. Again, kind of a random name where those are the ones that are gonna move very dramatically, 50% one day, retracing back 2 days later. That you might not want to be in that space. Again, mRNA, Shopify, those are fine names, but we want to focus on names that we can't get too beat up in, or that we have to find the craziest names to make back the loss. So those are just kind of like some major bullet points, at least that I'm seeing so far.
Yeah, and I agree. I think I just got in my own head, and I really agree with you. Just the crazy names and trying to find those ones that make a lot more sense in terms of a swing or something that I can lock in and with minimal risk and just get it and hammering down 5 to 1s. And I think the other thing I did that really kind of was uncharacteristic was I really overextended myself. Usually I'm pretty good at keeping my share size pretty minimal. But in that loss, that's exactly what happened. I just overextended myself, and I was like in the get out face where the guy's sitting in the chair and he's just like wide eyed and he can't move. That's literally I'm 100% sure that's exactly what I did. Was like, oh, it'll come back. Idiot. No, it won't. Like you should have just got out when you saw that. You knew what you did. Now don't make that mistake ever again. And I think that's the other thing is right now I'm in a firm this morning after the weekend. I was kind of like, okay. And that was another good trade that I had. But again, to your point, what I did was after it gapped up after earnings, I didn't buy the earnings flag. I waited for it to consolidate around 105, bought 105 and sold 90% in that day that it was hanging out at the top end of 120. And then what I just closed out today was I rebought 105 and then rode it and sold out at 130 today.
I mean, still, phenomenal trade. Again, you're just trading. So like you're trading the range, which is a great thing to do. It's like, you bought up near. So that, like, this is like the other trades that like the first couple ones, we're going to put say like C or D kind of trades where like this one, you're trading the range in it. And it's like, this is the range this thing has been in, a significant range. And, you're buying near support, you're buying down here.
I really had to be patient with that because I was like, okay, so if this tanks, you really need to get out quick.
Yeah.
But when I saw it ride up to the 120 range, I'm like, okay, solid trade.
Yeah.
And then when it gapped down again and I waited for 105, bought 105 again, and it worked out.
Yeah. Now this is dope. This is like, so even on TradingView, do you when you use TradingView, do you have like the free version where you just have one watch list, or do you have like the paid version where you can have more than one?
So I do the free and I do the shakedown and then your big pick.
Okay.
And then I organize it how what I think is the biggest opportunity and then I let the other stuff kind of sit. And then that way it's just like a watch.
Gotcha. Okay, cool. But yeah, so like this is great. It's like same thing in that recap. It's like you screenshot, okay, I bought here, stock was versus 99.99, kicked it for almost 20%. I pulled back in, I took the same trade, I sold it even higher. And now, this next time, if it comes back down here, maybe you try the third time, but maybe that time it doesn't work and it shakes you out and whatever, you lose a couple bucks. But that, that's just a part of trading the range. But there eventually will be a time where this range will eventually break, and that's where you want to still have some. So it's like, if it does come back down and you can buy some again, you can sell some up into 130, but then keep some if it wants to eventually make a move back to, like 150. It sounds like maybe you took the full position, but you definitely made some money in these, and it's just continuing to now, okay, I'm good at, finding, I can trade the range and post earnings flags. And that's something that maybe is your strong suit. So it's like, all right, let me keep focusing on other names that are in an earnings flag. And even for me, I can think of this W day. Like this W day, it gapped up on earnings. Now it's flagging, 260, 280, up through 280 in time, could be a nice breakout. It's probably going to flush this 260 tomorrow or the next day. But this might be a name for you where it's like, okay, it's going to flush 260. I'll give it a day or two to shake out. And if it's looking to turn back up, maybe I can buy up through 260 versus whatever the low is. Say the low is 256. Okay, I can risk $4 here. And if it can get up here into the 270s again, I can sell some and hold a little bit if it's going to continue to flag. So I can be ready to eventually buy up through 280, for the next move up to, say 300. This might be something that might be in your wheelhouse if you've already been doing pretty good with that, AF, RM.
Yeah, I think it's really being patient too. I was really patient on this trade.
Mhm.
Like I told myself, dude, if you're gonna work your way back, then we need to start taking profits when the profits are there. So start doing it. And as soon as I told myself that, this trade this last week, that's where I made up some big ground, at least from what I had lost before. And that's and you're right. These are the kind of trades I need to be looking for and trading the range and figuring it out.
Yeah. I think the main thing here too also is like so that it has this big move next day, basically doji highs. That's like the red flag. And it's not like, all right, I'm gonna put my stop below that low, because realistically, like the next day it just gives it all back. So when you start to see that, just like you saw the day that you sold here, you see a big 2-3 day move and you start to see, okay, now they're starting to sell. It's like, it's time to take some profits. And same thing with that, the name that had gone up basically 100% in 3 days. It was just a huge doji at highs, and like that's just a huge red flag of indecision where doji at lows, buyers and sellers don't know what to do. Someone's going to take over. Same thing at highs. No one knows what's going to happen, and the next day is going to typically tell us what the next trend is going to be. But we already know that when we see a doji at highs, it's usually the end of a shorter term move, and it's time to take some profits, and vice versa on the way down. Even like this EA, 1, 2, doji at highs, indecision, can't trade higher. 1, 2, 3, 6 days down, doji at lows, end of the short-term down move. Now it's time to move back up. So these are like, when we start to see these dojis, these are like telltale signs that if we're long, we see them at the top, time to get out. And if the name's getting smoked and we see near the low, it could potentially be a time to get back in. So that's like, if you're trading these ranges, like in W day, if it say flushes this 260 tomorrow and we see a doji at lows, that could be a sign that maybe it wants to go higher. And we even see it like down here. We have 3 days, doji at lows, doji at lows, doji at lows. It's like the stock doesn't know what to do. The next day, the buyers take over. And then they say, okay, I'm buying up through 232 versus 228, $4 risk. and then it goes, 15, 20 points. So those are those things where if you're gonna trade the range, it's like you really want to be like super aware of dojis. Those are gonna be like your best friends, and like the most information you're gonna get is when you start to see them.
Yeah.
Was
And I think
Mhm.
like looking over these pieces, I mean, yeah, $1,000 loss sucks, but if you break that down into 10 days at $100 a day, it's going to take 10 days to get back.
Yeah. So
So
that's also, those are kind of like things where it's like honestly gambler's mentality, but it's like if the gambler goes to the casino and it's like, all right, I'm gonna gamble $200, and that's like their hard stop, and they gamble $200, they maybe lose, and they're like, all right, I'm gonna go back to the ATM and I'm gonna take $200 more out to make back the 200 and stop, and then it's like, all right, well, if you make it back, you're just back to break even, but it's kind of double the risk. So it's, I don't want you to, of course, we want to make $1,000 back, but you don't want to make that like the ceiling of now every trade I go into, it's how much of that money can I make back? Where it's like you really have to just look at, okay, I go up to 105, it's in this range, 120 is going to be high, but I can, went more than half the range, I can take some profits here. Taking the trade again, it's now a lower probability because it's the same range I'm trading. But if I get this, this next day, this is a crazy day, I got to take some profits here. Okay. So it's more like you really want to take each trade individually and not, I need to make back this $1,000. So I'm going to buy, 1,000 shares here. And if it goes 10 points, I make $1,000 back. It's, you really just want to take each trade individually. But of course, in the back of your mind, you want to make that profit back, but you don't want to just start selling things because, all right, I can make $100 here and I just need 9 more of these trades to make it back. Because then it's just, you're not taking the trade for what's in front of you. You're just trading it for a different reason.
right. Right. Good point.
Yeah. All right. Was there any other names that you're currently in, or?
I'm holding half in a firm right now. So there's a high probability that I get rid of that. Just because of where it's sitting right now currently, like right in front of my face.
Mhm.
Or the other piece of it would be, holding it, giving it the low of the day. And then if I get out of that, then I still am taking profit on it anyway.
Yeah. That's the thing. It's like, the only thing I would say is like how many shares do you have?
10.
Okay. So what I would say is like trade 8 of the 10, tight. Okay, low this low, because again, this is the start of a flag, like this little area. Like it can very easily come completely down to here and completely bring the whole trade back. So if you keep at least most of it tight here, you still take the meat of the range. But like taking 1 or 2 shares and keeping it verse basically like 100, like not even verse 105, like just giving it the real proper room. One, you'll keep a closer eye on this thing if it does come back down, and you can easily rebuy those 8 shares. If it wants to go higher, sure, you got 2 shares, not that much, but you won't also care about those 2 shares where you could give this the room that maybe it could go to 200 in time, and you may make more on those 2 shares going to 200 than you would on the 10 shares going to 130. So it's like you can keep an eye on it. If the name wants to continue trading this range, you can, if it wants to continue to go higher, you'll have some. And with those last 2, you're not going to care about them as much as you would as these 10 shares. And if it does want to come up to here, you make 100 points in 2 shares, you still make $200. It's still a significant trade. So that's those things because when you're trading the range, eventually the range is going to break. But we just don't know when. And that's like, even for me, like I was keeping an eye on this QLYX for like months. And it was like, I just wanted to buy through 108. And I was watching it here. I was watching it up until basically this point, and I just kind of forgot about it. I'm like, I've been watching the thing for 6 months. Like, I just don't care about the same anymore. And of course, that's when it goes. But had I just had a small position in it, I would at least be in the trade and making something versus not having no position, just watching it kind of inch higher. But that's where, like, that's like if you were in this the whole time and you were buying every time, okay, buying 100, versus this 90, okay, buy 100, sell some 108, comes back down, I add a little bit more, sell to 108, comes back down, and you keep trading this rate, and eventually it goes, and maybe this time you don't have that much stock, but you made money in it this whole time. a little, you're just trading that range, you're making 8%, 8%, 8%, and now it's up 20, and you have like 2 shares up, but at least you still have those 2 as it goes back to 140, and then you make 40% or 50% on those 2 shares, which still is a solid return with a small amount of money invested in the name.
The other one that I'm in right now is Bros.
Okay.
And I just started that position today.
Mm-hmm.
So 52.50, really small portion there. Like 5 shares, kind of. It's really small. But my game plan is add through 53 if it wants to break that.
Mm-hmm.
And then if it decides that it wants to go higher, then great, I can add up through. But it's a really small position that if I want to give it the low of the day,
we were talking about this thing. We had like a little Zoom call earlier, and a couple guys talking about the Spurs. And again, look, it's a tight little flag. It looks good. The only tricky part is, the real answer is 50. So again, this is like we're seeing these 3 dojis. If it wants to break up to 53, you'll probably get a move back to 62. So it's a good bet. If you're going to buy through 53, you really want to, be thinking of selling up into this 60 area. And if it ticks up to 53 and can't get above like this 55 area, then maybe it's trying to find the door as quickly as possible before having to give it, under 50, because either way, if it's up through 53, 55, probably goes 62, and then under 50, it's going to be back at 40, before, in a day or 2, just because of how, why this thing can trade when it wants to go, because it's just a newer IPO. So just being aware of that, like if it breaks and breaks strong, great. But if it ticks 53 and, can go get about 55, it's probably going to head back under 50. So it just, but again, this is, for recent IPO, definitely looks very good.
Yeah, because those are the only 2 I'm in right now.
Cool. Anything else you want to go over?
And I really think that this has been big, man. Honestly, recommending the trade journal again, that's something that I have to get back into the habit of. I was really doing well with that for a while, and then I don't know what made me hop off, but it's got to come back. There's no excuse for that.
Even if you can see my screen, so like this is everyone who's asked to do a trading journal, and we've made them for them, and this everyone's not doing it. So it's like you can see here. And I've had to make every single one of these. I think each row is probably 25 people. So there's at least 150 people here who asked to do it and are not doing it. And then we have, these are the members who are doing it. There's 10, 20, there's about 30 people who are actually doing it. I can tell you off the top, Natalia, she's been doing it the longest. She's probably been doing it 6 months with me. And every month, the first month we did it, it was a disaster. And even this call, I don't want to say the trading was a disaster, but there's no concrete game plan. Like even when Natalia when we get on a call with her, it's okay, Bros buying up to 53, stop 49, selling it to 60. And she could tell me all her trades, each trade in 30 seconds. Here's the chart, cool. And I can see, okay, this is good. Okay, well, this was off. Let's not do this. And as each month progressed, it went from being quite erratic, which this first one is, and each month it started to tighten up, but it took some time. But each month she continued to simplify and kind of improve her own trading. And I've started to see that with the other members who start to do that as well. Like I did a call with Frederick the other day. I do one with Kevin every week. So all of these members here who are doing them, I've only seen improvements. I haven't seen anyone so far who's gotten worse from doing this. And it's not because we're doing anything magical here. It's just that you're being accountable to your own trades. The easy part is putting the buy stop above 53 and seeing what happens. That's the fun and the easy part. The harder part is after the fact, going back and looking at what went wrong, what went well, and finding out where we messed up. And like even for me, like I went over this rocket trade so many times, but for me, like I just know this mistake like the back of my hand, that this will not happen again. I will not lose 20% in this name or any name in the future in this setup. Like this just won't happen. And it's just because I've constantly hammered in all these little mistakes I made. that I just am not going to forget about. Next time this happens, I will know I'm out right here for break even, and I'm done with it. So these are those things where when you start to, again, track all this information, to track where the account value, to track how much you're saving, so to track this P&L, how much you're working out, things you're reading, all this stuff. The more that you're aware of it, the true numbers, not the numbers we think that are in our head, you're going to focus on them much more importantly. So it's like, okay, I lost it, like in your head right now, I lost $1,000 in this name, and I made $100 here, $200 here, $50 here. I think I made back 250 of it. But when you recap the trading drill, you might see, I actually made back 500 of it. I might have made back 700. But you'll know that because you sat there and spent, the hour to do that work. And then we'll get on the phone call. We'll do it again in a couple of days to do it. And we'll really hammer it in even quicker. And then we'll still have those same, main points for the month ahead. So, these are things that, for your own trading, I think would be very beneficial. And, I'll do them with you, again, at the end of every month. I have no problem getting back on the phone. Even if we go through the same trades again, I have no problem, doing it a second time just to get familiar with, this process.
Awesome. No, this is great, Ben. I appreciate you guys taking the time to walk through this stuff with not just me, but everybody in the group. So I appreciate this a lot.
So I just put a couple notes here, but like I said, at the end of the month, we got a couple more days, so Friday, spend an hour at some point this coming weekend, try to update this information and let me know, and then we'll bang through it. And like I said, the good thing is, again, on the phone with this recording, maybe you rewatch it, maybe you don't, that's again up to you. But at least on this document, like I can pull, when I pull Natalia's, hers is probably 30 pages long or 40 pages long. And at the end of each month, there's like those 3 to 4 main things for her to remember. And then she can just quickly go back and okay, stock split, more formal game plans. Like those little bullet points to remember, it's just quick, easy reminders just to remember, what to focus on.
Good deal.
All right. So again, once we hop on this call and this recording downloads, I'll just insert the link here. So again, if you want to watch at any point, you can. If not, obviously no biggie. But yeah, actually perfect because you're gonna have to do the Etsy recap as well. So we can, the next time we talk, we can just do both. We can knock out the Etsy stuff really quick, and then if the trading journal is done, we can, breeze through that one as well.
Perfect. No, that's great. Yeah, that'll be my goal to get this done by the Etsy recap and go through this.
Yeah. I mean, the main thing is really just the daily chart. And do you use TradingSync?
I actually just logged the bros and the affirm for my first 2 in there. So I'm used to it right now.
Okay.
So I've been using it.
There's I'm going to send you this lesson, and it just shows you how to change the settings on TradingSync. So you can, so instead of having to even put like the date, so this is, I'm putting it in here. So even if you don't want to, this will actually make the journaling even faster, because if you change the settings on TradingSync, which when you read this lesson, if you go down, it's basically like the 4th page. When you put in your entries, it's going to show like a daily chart, and it'll show exactly what you bought, exactly what you sold, and it makes the recap even faster. Because then you just send me like the link, which again is, if you can see here, like you copy this link, you send it to me, I pull it up, and I can see whatever the trades that you've taken or open, whatever positions, I can see them all there. I click on it, I can see exactly where you bought and the price, I can see what you sold. So that would make, I don't know how long we've been on this call so far, but we can do, we go over 10 trades in 10 minutes. It's just much quicker. So if you're already using TradingSync, this will be much easier for you as well as, for me to go through the stuff.
Cool.
Right,
this is sounds good, Ben. Yeah, I'll get to work on this, and then during the Etsy recap, let's get after it.
All right. Sounds good.
Awesome. Ben, again, thanks for the time, man. I appreciate it. I'm looking forward to actually looking through this video because I know that there's nuggets all through there. So I appreciate this a lot.
Okay, once it's done downloading, I'll add a reactor display so you can see it.
Awesome.
All right,
All right. Thanks again for the time. And yeah, we'll be talking soon.
All right, man. Sounds good. Well, have a nice day.
Yep. Have a good rest of your day.